we're hitting critical mass here, I think, and other people will trickle in as we go. But listen, I want to welcome everyone here. Markets closed. It's been a very, very good day for us as a company. Certainly, we've gone from a little bit of obscurity 3-4 years ago when Bill and I stepped in. $1 million market cap, pre-discovery, real turnaround story. Within a year of that, Bill had generated this Tonopah opportunity for us, and my contribution was I didn't tell him no. Within a year, within a few months of that, actually, our first drill hole sent our stock absolutely skyrocketing on the back of a proof of concept, and delivery of this maiden mineral resource update validates everything that we've said along the way. And if anything, what I'm guilty of is underselling the opportunity because we just established 100 million ounces of some of the highest grade silver and gold resources in the industry. We've drilled this out in 3 years, start to finish. This resource has upside baked into it. It's big enough to matter. It's clearly in easily the best jurisdiction you can be in, and it's on private land at that, meaning permitting, streamlining opportunities there should make us trade at a very, very high PNAV ratio as we get going. I'm going to pull up my slides here. Before I do, though, just, in my background, I've got a stock certificate on the middle shelf there. That's a stock certificate from a company called the Tonopah Extension Mining Company. The Tonopah Extension Mining Company was the third biggest producer in the district. It's where, the story of Tonopah was very simple. Discovery was made around 1900. It's an east-west trending vein system. The old-timers mined everything they could from surface, followed it underground, and as production went onwards through the 10s and 20s and early 30s, everything moved westward. Well, the Tonopah Extension Mining Company was where our project really picks up. That went bankrupt in around 1930 at the onset of the Great Depression. Metals prices went from $1 an ounce US down to 35 cents an ounce. And the debt deal they did to fund all the development they were doing sunk the company. They couldn't pay it back. We're the first group to come back in 90 years later and start drilling this company, this project. We've picked up where the old timers left off, and that proof of concept that we established on that first drill hole and on this resource is very clear. The old timers left a hell of a lot of resources left behind, and it's up to us to keep putting one foot in front of the other to move it forward. So, certainly going to be making some forward-looking statements here. I've been looking forward to this ever since we got our project. That 100 million ounce figure has been seared into my imagination, and now it's clear that we've got a hell of a lot more room to run in terms of expansion potential. In terms of just the district, from a 30,000-foot overview, the Tonopah Silver District was known as the Queen of the Silver Camps. This is the second largest historic silver district in Nevada, second only the Comstock Lode. It's one of the reasons why Nevada, to this day, if you go on the highway, is known as the Silver State. They say, welcome to the Silver State. Now, this is a very, very significant discovery. In 1900, this was about 5 or 10 years after the Comstock Lode had petered out. So, a whole bunch of Nevada's population had left chasing riches elsewhere, but it was the Tonopah discovery in 1900 which reinvigorated the state. It led to a series of other discoveries made in quick conjunction after Tonopah as people chasing riches came in and made new discoveries. Goldfields, Beatty, all of the lower half of the Walker Lane district was discovered following the Queen of the Silver Camps discovery in 1900. Some very, very, very consequential people throughout history have been through there along the way. Wyatt Earp, Mark Twain, both set foot on our property. Wyatt Earp ran a saloon and served as a deputy sheriff. Howard Hughes had come by in the 1960s, trying to consolidate as much as he possibly could as well. But it was really until we were able to consolidate a series of patented claims together, bringing them together as one, that this rediscovery was born. Now, Tonopah in its heyday produced about 175 million ounces of silver and 1.8 million ounces of gold. Now, what really stands out about this, though, is that all of that production came from just 7.5 million tons. So what does that mean? It means it's high grade and the metallurgy is fantastic. And we've proved that in spades with all the work we've done in recent years. The story of Tonopah is really easily conveyed just on the story of this production chart here. What you'll see is the discovery was made in 1900. Whole bunch of big serious groups came in, and it was a hockey stick chart up in terms of annual production. You'll see the grades that it averaged over its heyday. But the real setbacks that occurred along the way were, one, obviously right around World War I, but two, around the early 1920s, following the rebuilding of London after World War I, the Bank of England was purchasing silver dollars from America, sourced from the Tonopah Silver District. They were called the peace dollars. The silver dollars were pegged at $1 an ounce up until about 1923. And what happened is, after the rebuild there, after they were able to backstop their currency with actual ounces in the ground, they unpegged the price of silver and gold. Silver went from $1 an ounce in the mid-1920s to about 25 cents an ounce by the early 1930s. And everyone had thought that the history books had closed. What we've just shown is that those history books need to have a few new chapters added. Now, before we get into the resource, I'm going to make a couple things abundantly clear. This story here should be the thing that investors should think about in terms of how we should be valued. This chart here shows where we were trading a week ago at the end of September 29th. Along the x-axis, you'll see the average grades of other silver developers in the industry. These are undeveloped silver projects. We've got Silvercrest up there as well, just for point of reference. Along the y-axis is our ounce in the ground valuations. 1 week ago, before this resource came out, our ounces were trading single-handedly as the high industry-leading ounce in the ground valuation. The only thing that has happened since yesterday is our grade has gotten better and we've established standalone status. Here's where we're trading right now. You'll see that instead of leading our peers, you see Dolly Varden, you see Vizsla, you see Outcrop, our other high-grade peers, all trading for just under $1 an ounce. Here we are, we're trading for just under 50 cents an ounce. This is a beach ball that is being pulled underwater right now, and the only question is how long and how violently it is going to take for it to pop right back up. As I said, the only thing that's changed between these two slides is our grade has gotten measurably better, and we are now seen as a standalone opportunity with built-in expansion potential. The question's not if, it's a question of when. We're on private land in Nevada. There's not a single other jurisdiction any company would rather have a project, and let alone the fact that being on private claims means that it can be quickly expedited through permitting towards development. With that, I'm going to introduce Bill Howald, who's, when we first met on his CV, said he had discovered 100 million ounces of gold in his career. Well, he's going to have to update that because he's now established 100 million ounces of silver equivalent too. Bill, I'll hand it over to you if you want to get into the resource.
Yeah, okay. Thanks very much, Andrew. Okay, thanks everybody for joining. We're really excited by what we put out here yesterday with the resource. As Andrew said, it's a very high grade. We've made a benchmark of over 100 million ounces of silver equivalent. And the beauty of it is there's no end to it at this point. We still see some areas where it's open and some real good opportunity within our claim block, which Andrew has already said is on private patented claims. So the resource is really divided up into 4 areas: Victor, DP, Bermuda, and the Northwest Step Out area. You recall we used to have an area called DPB. With our model, we noticed that the Bermuda vein, very high-grade vein, was really being muted by the surrounding other veins with Denver and Paymaster. So we wanted to break that out independently just to show the nice grades that it has. If you look at the gold grades are pretty good, and silver is excellent. So it contributes quite a few of the ounces, about a quarter of the ounces that we see. Victor is still our largest vein area with over 38 million ounces of silver equivalent. And then we have the new Northwest Step Out area. So that was something that wasn't included in the original resource that came out in April of last year. So this is a new area. It's roughly a kilometer from the DPB area. We've put a few holes there and come up with a preliminary resource of about 12 million ounces of silver equivalent. So one of the things that we've been working on over the last year since our 2022 drilling program was to really try to understand what was going on in the Tonopah district and with our veins. And through that, we've come up with a reinterpretation, a structural reinterpretation, and that has helped the resource move along and has really shown some good continuity with grade as well as an increase in the tonnage. We're using fairly good numbers for our underground mining. You can see in the table below, $83. These are US dollars per ton mined. Processing cost of $22, G&A of $14, refining, and then we're using 22 prices of $22 silver and $18.50 gold. The overall cost for mining is $119 per ton processed, and from that we get our 200 grams per ton silver equivalent cutoff. So all of these are at that 200 gram. What I can tell you is the deposit is very, very robust. Just as an example, if we were to use a 400 gram cutoff, we'd still have almost 3 million tons grading around almost 780 grams per ton silver equivalent. So it's a very nice resource, very good with respect to the continuity and the veins. Okay, can we go to the next one? Okay, so as we've talked in the past, geologically, we're on a boundary between two calderas. So you can imagine a volcano, it exploded, much like Mount St. Helens back in 1980, and it blew up and there was a crater left. And at that time that it blew up, that's when the gold and silver mineralization occurred, at least in the northern caldera, what we call the Tonopah caldera. And based on our 2022 drill program and reviewing and relogging the holes from the 2020 and 2021 drilling programs, we started to notice that the units that we see inside the caldera, and we were able to make a distinction between those that were outside the caldera. And one of the things that came out of that is we could see most of the high-grade mineralization was following that caldera margin. So that was a change from our 2022 resource, in the fact that we tried to make things more east-west when we can see that the caldera is actually swinging from a more east-northeast to an east-west to a more northwest type orientation, and that's that blue line on the right side of the slide. That becomes very important, because when we start to hook the veins up and kind of model that margin, what we notice is that they follow it quite closely. And that gave us a lot better continuity with the grade, and also linked up some veins that were kind of orphaned by itself, so thus increasing the tonnage. So you can see on this slide, it's a pretty easy program to move forward. We've got our Victor on the right-hand side, the very right-hand side. DPB is that larger cross-hatched area, and then the new area, which is the northwest step out. And we can see that green line, that's our caldera margin. So you can see how these things are hugging the caldera, and there's a lot of room to grow to the northwest. Also internally between DPB and the northwest step out, and then also between Victor and the DPB area. So we're quite excited by that, in that we haven't really drilled in between those three deposits, and we certainly haven't followed it off to the northwest. So there's room to make this thing bigger, and that's probably the next step.
So you know, the puzzle pieces were all scattered on the floor, and with this northwest step out, we've now got another corner piece that we're able to start really building upon. But it's coming together quickly now. I think that's part of the understanding process. Is, you know, we only started drilling this project 3 years ago, and we didn't inherit. Well, there was one single drill hole, I think, drilled by Chevron, if I recalled, in this area entirely. So we've gone from nothing or one to now 100 million ounces in 3 years. But we've now got massive expansion potential that's low hanging, and baked in. I think after the first resource, a lot of people thought we capped our upside. No. We know now we're actually blessed in two ways. One, it keeps going. And two, had that vein system kept going east-west, we would have been royally screwed because as you'll see, we're running out of space to the west. It's God's grace that it's turned up to the northwest there and it's wide open. So we've got the anchor point there. We've got anchor points down there, and it's easy enough to do infill drilling to connect the dots, turning those three areas into one, which will obviously have a positive consequence for development. Maybe, Bill, what would be helpful, I think, would be if we could get into the model, if I can find a way to stop sharing here, and we can show people just how the sausage is made.
Okay.
There you go. Yep.
Okay, can you see the model there?
Yep, that's coming up.
Okay. All right, just for some orientation, this is the Chevron station. So if you've ever driven between Reno, which is to the north, and Las Vegas, which is to the south, this is the highway. This is the Chevron station. Most people get gas there. If you've ever stayed in Tonopah at the Clown Motel, that's right there. And this is the margin of the caldera, this kind of blue line that you see here. For reference, this is the Victor area. This is the DPB area, and this is the Northwest Step Out. So I wanted to bring up the model in total because what we generally do is model down to about 1 ounce of silver. And that's how we're able to bring our veins across from hole to hole. And then obviously, we're not interested in 1 ounce. We're interested in the high grade. And so what you see in yellow is that 1 ounce a boundary, and in the pink is greater than 31 grams, and in the pink is greater than 150 grams per ton. So it's that pink that we're really after. And if we were to turn off all of the yellow, we'll just have a look at the pink zones. Okay. So in pink here, then this is the Northwest area again. This is the DPB, and this is Victor. Some of these things you see out that are scattered by themselves, those are not in the resource. They are orphans. So our goal will be to bring those orphans into the model. Anyway, let's tip it up, and we'll look at those veins. So over here, basically, you can see what we call the Merton vein system is this heading to the north. This higher grade Bermuda vein in the middle, the Paymaster vein out here, and the Denver vein and the Victor vein. Okay, so that pink area represents a little over 5 million tons. Because we're a block diluted grade, obviously we don't want to have zero in the blocks, so that's why we model out to that 1 ounce area so that when we do our estimation, it can fill the blocks that aren't high grade with some grade. And from that, that's where we get our 6.12 million tons. So between all of this pink and some of the yellow, that makes up the 6.12 million tons.
And all those areas in between, those have yet to be infilled, right? So that's the low-hanging fruit here. The 100 million now takes us into standalone territory, but from a development purpose, we've got some low-hanging fruit to establish a continuity better.
So this is the one area between Victor and DPB that needs to be infilled. And this is the area between DPB and Northwest that needs to be infilled. And then, as I said, it's still open going this way to the Northwest.
And all of the concepts used in the resource, I mean, these are conventional underground. We're not using any exotic mining methods here, right? There's no resu mining.
No, this is based on a model of long hole stoping and cut and fill. And that is the average of those two methods.
So straightforward. That line driving, well, it's hard to see the line there, but you can sort of see it. That's US Highway 95, which connects Vegas to Reno. As Bill said, there's a Chevron, there's a Burger King right at the base of it, and a Subway sandwich shop. But what that means is when you're looking at developing this, it's all got positive consequences in terms of capital costs. We don't have to build man camps. The tallest structure in Nevada up until 1940 was the Mizpah Hotel, which is just right outside the frame there. All of 6 stories, I believe. We don't have to move power lines. We don't, everything we need is there. And getting people to want to work there versus, Timbuktu is a pretty easy proposition. So we've got after 3 years, we've got a pretty straightforward path to take this forward to the next step, which is one more big round of drilling from surface to connect the dots. That's not even talking about the step out potential beyond where the Northwest continues to run to the north, but just infilling. And then we can probably rack some economics on that too, right, Bill?
Yeah, so that would be the next steps, is to find out how big it's going to be and then turn around and do a PEA on our, but certainly with that 6 million tons, we've hit some critical mass with our resource. So it's probably something that's could be a mine.
Great. Well, we've got a Q&A area set up here. So if anyone has some questions for us, feel free. I'll start off with the first one here. It says, what is the general depth of the mineralization? I know we haven't found the bottom at Victor, certainly, but Bill, why don't you weigh in?
Yeah, so it starts roughly 200 meters below the surface. And we've drilled it down to roughly 2,700 meters below the surface. So as this is not an open pit. This is a high grade underground vein mine, and that's how we're progressing with our drilling and how we orient everything towards that underground, optimizing the underground.
I see a very good question up next, and it's just kind of funny. It says, do you have guided tours? No, we don't. But what's amazing is that, going on 15 years, maybe longer, right next door to our property is a mining museum talking about the significance of our property and the district as a whole. Tonopah is right in the center of the Walker Lane. I mean, we're 40 miles from Round Mountain, which has made 15 million ounces of gold at this point. And the amount of geologists and engineers that have been through the Tonopah Mining Museum and looked at our Victor headframe ominously from in the distance there. No one had been able to sink a single drill hole until we were able to consolidate the project. And so if you want a tour, that's a hell of a tour to see. I mean, it's like going back in time, but also it's looking into the future, because literally where that Victor headframe is where those old timers left off. And we've now established 3 kilometers of strike, and it keeps going. And within that 3 kilometers of strike, there's big swaths yet to infill. So the expansion potential is inherent. That's why our cost base is so low. I mean, we've done all of this, 100 million ounces we've drilled out for an all-in exploration cost of 29 cents per ounce. For America, that is insane, especially at the grade we're having. These aren't widely spaced, low-grade bulk tonnage holes. We're using very, very conservative, highly constrained metrics here. And we've got some of the highest grade ounces in the industry in the single best jurisdiction you can be in, easily permittable, something that everyone would want to have. And we've done it for 29 cents. Now, right now we're trading as of this morning for 40, 50 cents an ounce. A week ago, we were trading for just north of $1 an ounce. Now, how long, once again, that revaluation takes for people to absorb and understand what we're doing here, that's the opportunity for investors here. But we've got some low-hanging fruit to continue going on the drills, but it's been a substantial ROI thus far. And you know what? The retort to this valuation thing could be, well, what if you don't move? What if you just stay, going from the highest industry-leading ounce in the ground valuation to now trading at 50% the ounce in the ground metrics of your peers? Well, the cure for low prices is low prices, because we're now over 100 million ounces. the cure to this, the cure to things not moving and investors not getting rewarded in the short term is for us to have to defend against a hostile takeover at these low prices. So either which way, winter is coming for this valuation. But enjoy the Black Friday sales where they last. So with that, I'll see what other questions we got. When do we got to see? Okay, when are we going to see economics of the project? Well, that's, the next round of drilling is going to be the big push to establish continuity, effectively taking these 3 deposit areas and bringing them together as one. Now, what is a PEA? A PEA is a back of a napkin mine plan. We're not going to wrap a mine plan around 3 different separate deposits. We're going to go and establish that continuity for ease of development, and then we're going to do it. But if you want to know economics, well, our cutoff grade is 200 and our block diluted grade is north of 500. Anytime your block diluted grade is more than double your cutoff grade, it's a robust, high margin deposit. This has many, many similarities to Silvercrest Las Chispas deposit. Even in terms of resources, I talked about their maiden resource at Las Chispas in 2018. They put out 3.4 million tons at roughly the same grade as us. Just they didn't dilute it. We've now surpassed them on their second resource. They came out with roughly 90 million ounces. Here we are at 100. But the grades are very similar. The vein thicknesses are very similar. And just like Silvercrest, it's just high-grade gold and silver. You process it, and you're left with gold, silver, and beach sand. Why am I using them as a reference? Well, because they've just entered commercial production. They're making gold and silver for about $12 to $12.50 US an ounce. That's a high margin, lowest quartile cash cost. There's no reason to think why we can't have something similar here. We've got a lot more. Well, give us a year, give us 2 years. You've seen what we can do in a short time with this. But we think this is going to be a very robust deposit that, in a price environment like this too, with the wild swings of silver and gold, those bulk tonnage ones that you see, the low grades and low cutoff, but massive amounts of ounces, they may or may not work. But high grade ones like this work in high price environment or low price environment. It's and that's what's going to attract the interest at the end of the day. Okay, so I got another question. Is there any interest in purchasing and or merging with the neighboring junior miners? The Walker Lane district is a hotbed of activity and has seen a resurgence. It hasn't been this hot since the mid 1900s. In fact, for a long time, everyone was saying, a few quick screws and you can turn this into a 100 million ounce deposit. Well, we've just done that, and we've got a whole lot more of upside left to do ourselves. There are obviously some neighboring deposits. You got Westfault Mining directly adjacent to us to the south. They've got about 1 million ounces federally permitted. They could enter production whenever they decide to push that forward. And obviously to the eastern half of the Tonopah Silver District, Suma Silver. It won't take much to turn some screws, but at the same point, we've got more than we can chew on right now, and we've got a clear path to keep advancing this project towards an economic stage. So, anything can happen. It's all about valuation, but right now, we're now entering that status where, the discussion's always going to be there, and it's always going to make sense whether it's us or someone else. But Tonopah is ripe for the picking for a consolidation, and whether it's us or someone else, it will happen. That much I'm sure. Let's see. What is the potential for further expansion? Okay, Bill, but just in the infill areas, do you have any ideas in terms of where it could go? It's going to grow in 3Ds because we've yet to find the bottom either, right? So
yeah, that's right. It's still got a lot of expansion potential to the northwest, and then also of depth. We've never really reached the bottom of the deposit with our drilling. So, those are good problems to have, I guess. But, as far as going deeper, we'll probably save that for when we're underground at some point. And then, we'd like to know how big it is going off to the northwest, because obviously you want to put your infrastructure in the right spots. You don't want to have it skewed one way or the other. So.
Yeah, well, that's actually a good point, and that leads into the next question. We've got a question. Can you speak to how mining and milling could be done so close to the town?
Yeah, so we're, where we would have say a portal and the mill probably is likely about 3/4 to a mile to the west of town. The main part of the town is nestled in some hills that are to the south and kind of wrap around to the west. So we would be hidden back behind those hills, and you probably wouldn't hear too much. Probably the highway would be a louder distraction in town than any mining or milling operation.
Yeah, this is true mining counties that we're in. I mean, the outreaching of support we've had along the way. I mean, it's seen a resurgence for Tonopah. I mean, just in the last few years, some of the two famous historic hotels there have been completely redeveloped, brought back to life. The Mispa Hotel, and across the street, the Belvada. The main drag there in Tonopah's being redone. A lot of that's through the tax revenue generated by the increased activity, just not only from us, from Suma, from Westfold, from all of the lithium deposits nearby too. I mean, Tonopah, as many of you guys know, isn't just famous for, well, Tonopah's there because of the silver district, but it's emerging as the Carlin trend of lithium deposits. I mean, you've got some of the largest lithium resources in the world right now, right next door to us. You've got a silver district, which goes like this, and a lithium belt, which cuts right across it. And in fact, to the north on our unpatented claims, on our BLM claims, obviously we made a discovery up there last year, which is now in the hands of a lithium partner to advance the ball forward. And they've drilled out 7.2 square kilometers with every single drill hole hitting lithium mineralization at grades equivalent or in the realm of our next door neighbors up there on the lithium belt. One of them is American Lithium, which has a PEA out showing an upside case of $5 billion NPV. So, I mean, if you look at this holistically, I mean, we've got this really, really high-grade, robust resource for silver and gold that's clearly going to keep growing and got a clear path forward at this point. But just across the street and up the hill, you've got lithium sitting right at surface next door to a whole bunch of other lithium properties that are commanding a lot of interest right now. So, it's still early days at Tonopah, even though, 100 years ago, this is the center of the mining universe. But things are coming together quickly now. And just like the pieces of that puzzle I was representing, where, you've got 1,000 different pieces and you don't know what's what. But once you start piecing a few things together, they start gaining critical mass very, very quickly. And it's not linear growth in terms of how quick it is to put the pieces together after that point. They come together very, very quickly. And that's what the picture is going to be like for us over the next couple of years. In the grand scheme of things in the marketplace, as silver producers go, I mean, Mexico is the number one producer by a country mile. You've got China and Peru neck and neck for 2 and 3. And then you've got a whole bunch of far-flung places making it not so easy to do business. We've got one of the highest grade large projects in the industry right now that's not printing money. And we're on private land in a state that is hungry for resources. I mean, the world's going to be getting a smaller place. We've all seen that. And I think having something small footprint, underground mine that can be robust and drive forward and bring jobs to the community is going to be something that I think will be valued. So with that, I think what we should do is I'd like to open myself up for questions via email moving forward. It's just andrew@blackrocksilver.com. I see a lot of familiar names on here. We've got analysts, we've got corporates, we've got many retail investors that have been with us since day one. Thank you very much. Future just got a whole lot brighter here. That'll take some time. These things don't happen overnight. Tonopah wasn't built in a day, but there's a lag time, or as I call it, delayed gratification. We're backstopped by some of the highest grade ounces. Once again, our valuation compared to our peers won't last forever. This is up to you guys. It's your outlook to silver and gold, but there will be a flight to quality and a flight to good assets. This is one of them. So with that, I'd like to thank you all for coming, and thank you, Bill. Cheers. And with that, cheers. Okay. Well, shoot me an email at andrew@blackrocksilver.com. But hope this provided clarity. A replay will be available, and we'll go from there. But thank you all very much. Cheers.